Hey, how's it going?
Good. Are you watching this gold price this morning?
Yeah, so I'm watching a lot of things. Gold tanks, oil does the same. The initial market reaction was up for the stock, so I think it's just a confusing time. The initial reaction's never going to be um, reliable, so we're
Yeah,
just
because you
kind
had
of,
that on that retail sales number that printed this morning. I actually thought that it was and maybe I'm wrong about this, Frank, but I actually thought that the retail sales number coming out much less than expected, -1% and then minus 0.8% on core. That's a big, much lower than expected. And to me, that signals, hey, the Federal Reserve, they don't want to crash the economy either, right? So, like, at some point, they have to make decisions if they want to rate hike or slow that rate hike or even stop. And I feel like somebody mentioned it in the audience today. They mentioned that we had like the trifecta. We had PPI, CPI, and now retail sales numbers all show cooling in the economy. What's your take on that?
so I don't think that they're going to stop. I think what's expected is that they're going to hike in May. Um, They also said they could be followed by like an extended pause. Obviously, they don't want the market to crash, but they're also emphasizing that inflation's their number one priority still. So I think if anything were to happen, if any efforts are going against like a recession, it's to make it sort of a mild one or what they call it a soft landing. But
Mhm.
I don't think I don't think we're going to be able to avoid that necessarily, especially with this cooling economic data. We saw a beat in NFP last week, but it was still much lower than the month before. So retail sales are coming down. It's just overall like we're looking at contraction, and I don't think that the Fed is necessarily going to step in and start like cutting rates like some people say. I think
Right.
they're going to continue on the path, but maybe at a slower pace. And like if a recession occurs, like so be it in their eyes.
Yeah, and I think that the market would somewhat agree with you here today, as despite those numbers, we're seeing the S&P 500, still made pretty good gains this week. This is a 15-minute chart, and it did have a nice move up on those inflation numbers. But yeah, no, I mean this morning retail sales numbers did not have enough. It's kind of a weird one because retail sales, the stock market in some ways, if you think about companies, especially like companies exposed to retail spending, they don't necessarily want to see that number go down tremendously either. So retail sales, I feel like, is a tough one for uh, in a high interest rate environment where they're trying to cool inflation. Cooling retail sales or hotter than expected retail sales, both of them are not necessarily like really optimistic for the stock market, at least
Right.
in my take on that. What do you think in terms of the other markets you're watching? You mentioned oil a little bit. Do you want to share your screen if you have any charts
Yeah.
that you're looking at?
Oh yeah, let me pull that up. Yeah, so I was looking at gold and oil. Um and like I said, gold, it has periods of consolidation, pulls back, and then it spikes up again. Um, when it's in an uptrend like this, and oil does the same thing. Right now, we're at this new period of consolidation on the 4 hour where things are just kind of trailing downwards, and then followed by these big green candles. And right now, price is on, or it had bounced off support. So if you're looking at any long entries here, I would think this is like a good opportunity if you want to follow big money and see where they're putting their money to. So
This month, we're doing our biggest sale of the entire year on our software tools and Discord community. If you're not already inside of our Discord community, it has access to all of my trade signals as well as my team's signals. We share our full breakdowns, entries, exits, and analysis behind every trade that we're taking. You can see the good, the bad, but with all of it, analysis and breakdowns to hopefully educate you in your trading journey. To get access to this sale, take a look down below in the description or head over to our website if you have questions and type a1trading.com. Go to the bottom right where there's a chat box and type the word sale. One of our staff here at A1 Trading will help answer any questions you have about our signals, about our software, etc. Thanks for watching. Back to the video. Oil's been an interesting one to watch in that COT report, as it has continued to be sort of a high on the list by Frank. I want to take over the screen for just a second and show you this gold move that we were watching just before you were hopping on. We were
Oh
talking a little
wow.
bit about this. Look at this drop on gold. This is a really quick drop, and I had mentioned I was kind of interested in this zone here between the 38.2 and the 50%. But with it dropping like this, I've just got to be a little careful on this. Like when it moves so quick like this, I like to see it like pause, at least like calm down for a second, because
Right.
sometimes you'll look at a chart like this, you'll buy it, and then it will just drop way further, way quicker. So very interesting move there on the gold market. Why do you think that is? Why do you think it's selling off so hard?
Honestly, I don't really know.
Yeah, it's kind of
Very,
weird. Like,
very confusing sentiment, I guess. Oil, same way. The stock market is also selling off. It's like they're all kind of correlated too, even though they're supposed to be opposite. Um, I think it's just looming recession fears. People not really knowing where to put their money. Um, but then again, like if you just stick to fundamentals, like what's going on right now, um, like we're seeing probably an end to rate hikes at some point.
yep.
It's a clearer picture overall. We're not going to be as aggressive, according to Powell and the Fed. So
Yeah,
stocks are looking brighter, and then on the other side, oil, OPEC production cuts cause a surge in demand.
yeah,
And
and I
usually,
want to think in terms of what you just mentioned with rate hike forecasts, right? The thing is that when it comes to, by the way, Frank, I mentioned this earlier. I bought my first bond today, so you'd be proud of me just for finally pulling the trigger.
your first treasury.
I bought a treasury bill. I bought just a 1 year. Uh, 1 year, but just to diversify. And I was mentioning that just because we've talked about it for so long, but I might mention that in today's video. But anyways, going off of what you were saying about expectations for rates, we could actually take a look at the Edge Finder. We worked hard enough to pull this data up for, let's see if I can go interest rates. Um, interest rates in terms of where things are headed, right? So right now, the U.S. is at a 5% interest rate. We're both sort of in the camp of thinking that there's a good solid chance that they rate hike one more time. I think that from there, that probably they might choose to pause there and watch the numbers and see how things go. But I think that it's very possible that could be the peak of interest rates. So we're probably looking at 5.25%. And then possibly a cool from there. That's kind of where we sit. And of course, for the currency traders out there, this number is the U.S., but this is why people ask, why is the dollar strong or weak relative to other currencies? It's a lot of times because of something like this, where you look at Australia, which has their interest rates are much less and less attractive. If you're a stock trader or investor, dividends are important, right? So dividends are how much you get paid to hold on to a stock. Well, it's similar in the interest rate world with currencies and bonds and things like that. The US is more attractive than most of the other major economies at this time. So that has been a contributing factor to the dollar. But as Frank and I are talking about, that trade is sort of going away with the expectation for rates to pause or even get cut. And then the last thing I'll say, Frank, in terms of that, we've got this on the Fed tracker. I'm curious to see what the latest in terms of interest rate forecasts are on this. Have you looked at this page anytime recently?
Yeah, so I saw the forecast was 5.25.
Mm-hmm.
Um, honestly, I could see it going higher, but I think that could be over time. Inflation is still in their eyes like a bit concerning. They said there's more they can do, um, and that could be another 25 basis point, or it could be a couple more. So we'll
Yeah.
see. It all depends on the data, but
Yeah.
as well, I was looking at gold, um, or what could be causing the gold sell off. And
Mhm.
when you mentioned you bought bonds, and I checked the 10-year note. Um,
Oh, my timing was awful.
bond,
I should have bought it a little later.
bonds are definitely on the rise, so that's bringing value to the dollar, and probably what's sinking the stock market and gold as well. So
Yeah, no, that would make sense. And I was going to mention that with the dollar trade, and I'll show you this real quick on the dollar chart that I had pulled up. So the dollar popped here this morning. My take on this, Frank, is I'm not overly bullish on the dollar, and in fact, I think that this was probably a necessary pullback after all this movement here to this week. I think that you probably saw a good chance of any slight reason to rally. The dollar probably wanted to. So now we're seeing what I think is probably a good healthy pullback down to back to like 101.5. From there, I'm still technically sort of bearish on the dollar. I think the chart still looks pretty weak, and it would make sense in the sense that, like what we're talking about, rates are sort of expected to again at some point pause or even get cut. And like you mentioned with the 10-year, that popping here a little this morning as well is going to have positive impact on the dollar. So rates are a very interesting market to watch, and I know that they're not very, in terms of the forex world, most traders do not pay attention to them, but they're a very important market. Yeah, Frank, the last thing I wanted to say is you were pointing out this chart has us at 5.25% as a forecast. I thought this was interesting that sort of on the forecast, they do actually have a interest rate decline of down to 4.75% by the end of the year. What do you think that's what are the odds that happens? Do you think we get a rate cut by the end of the year?
by the end of the year, no, I don't,
don't
think
think so?
so.
Okay.
At least that's not what I'm hearing.
Yeah.
I think 5.25 was the goal at the end of the year. And 2024 would be when they decide to keep it there or cut. So I think we're going to be probably a little higher in rates going into Q3 and 4, but I don't think we're gonna cut this year.
Fair enough. Yeah. I mean, I think that's where I might diverge a little bit with you. I think that there's a possibility, but maybe that's just me being hopeful. And markets can be ruthless. So I think that my take on it is I think we hike maybe one more time. We pause. We let that inflation curve continue to dwindle. And if there's any signs, especially if you get like fears around the banks and that sort of thing pop up again, I think it is possible that a rate cut, and I would like to see it. It would be cool for the stock market. And of course, I'm wishful thinking, I guess, for some of my own investments. But anyways, Frank, thank you for coming on. I feel like this was an awesome session. And as always, your commentary is super helpful to the audience. Every time I get on here, Frank, nowadays, I can't get 10 minutes into my own stream without seeing somebody say, "Where's Frank? I want to hear what Frank has to say." So I got to also tell you, actually, last thing before you go, Frank, I messed up. I bought a bond for Macy's, like Macy's, the outlet store, right?
Did you get corporate bonds?
Corporate bond, and I was playing around, and I'm so new to bonds. I don't know what I'm doing on there. I'm playing around with them, figuring it out. And so I bought Macy's bond, a corporate bond with Macy's, and it was offering 8.5%. I was like, wow, that's pretty dang good. But then what I realized, Frank, is that the expiration or the maturity date was 2037. So I was like, okay,
no.
I don't really want to tie up my money for that long. So anyways, I had to sell it back to the market really quick, but it was just a funny mistake. But you live and you learn. So it was fun as always.